How do I get an escrow waiver? If you are looking to manage your property tax and insurance payments on your own, you might be wondering how to get an escrow waiver. This option can provide you with more control over your finances. However, it is important to understand the requirements and steps involved in obtaining one. First, not all loan types allow for escrow waivers. Government-backed loans, such as Federal Housing Administration loans and United States Department of Agriculture loans, typically requiring escrow accounts. On the other hand, conventional loans, Veterans Affairs loans, and some Freddie Mac-backed loans may allow for waivers if certain conditions are met. Next, you need to meet specific financial and loan criteria. A strong credit score is often necessary, usually a minimum of 620 on the FICO scale. Additionally, you should maintain a loan-to-value ratio below a certain threshold. This is often 80% for removing escrow after the loan is established, or up to 95% for waivers at origination on some loans. It is also essential to be current on your mortgage payments and have no recent late payments, typically no 30-day late payments in the past 6 to 12 months. You must also ensure that you have no delinquent property taxes and a positive escrow balance if you are removing escrow after the loan is established. Furthermore, your property should not be in a flood zone, as properties in these areas often requiring escrow for flood insurance. Once you have confirmed your eligibility, the next step is to request the escrow waiver. Reach out to your lender or mortgage servicer to ask about their specific policy regarding escrow waivers. They will inform you if your loan qualifies and explain any fees involved. Some lenders may charge a waiver fee or slightly higher interest rates to offset the risk of not holding escrow funds. It is also important to understand your responsibilities with an escrow waiver. You will be responsible for paying property taxes, homeowners insurance, and any related expenses directly and on time. This requires careful budgeting to avoid penalties or lapses in coverage, which can affect your investment property. Lastly, be aware that some states have restrictions on escrow waivers, and lender policies can vary. Consulting a mortgage professional who understands local regulations and lender guidelines is advisable. From a real estate investing perspective, obtaining an escrow waiver can improve your cash flow flexibility. However, it also means you must manage and budget for large payments like property taxes and insurance premiums yourself. This can be beneficial if you prefer direct control over your funds or want to invest surplus cash elsewhere. Just remember, it requires discipline to avoid financial risks.